While everyone focuses on the American equity markets, a troubling situation is developing across the Atlantic in the world's third largest economy, Europe. Quietly, the economic situation has turned for the worst as rising inflation, an energy crisis, riots in the streets, and violent war have turned the once stable continent into a teetering mess on the brink of collapse. In today's video, we examine some troubling details regarding the European Union and look into a wild situation that may push many of its members to the brink. We start with the obvious. Inflation levels throughout Europe are getting dangerously high. This is especially true in some of the less developed southern and eastern states. For example, Lithuania, Estonia, Latvia, Poland, Romania, and the Czech Republic have all reported an official inflation rate above 15%, some even above 20%. At rates like this, it would take less than 4 years for prices to double, and given Europe's history, these periods of economic instability are usually met with a rise in violence, rapid political changes, and even revolution. But all of this inflation talk pales in comparison to what is happening with energy. A massive ticking time bomb has now been engaged, and if not disarmed by the winter, Europe will face its worst crises since World War II. As you have likely heard, the Europeans rely heavily on oil and gas coming from this guy, and now that this once great friendship has turned sour, this guy is threatening to turn off the taps, feeding the third largest economy on Earth. While talks of banning Russian oil and gas have circulated for months now, they have been nothing more than threats and posturing. Putin continues to pump towards the West, and although flows have diminished, they have nonetheless continued. However, starting this month, flows have been getting slashed, with Russia citing maintenance issues with various equipment. In fact, it was recently announced that the Nord Stream 1 pipeline, the EU's biggest piece of gas import infrastructure, will be closing on July 11th for maintenance. The big question on everyone's mind is obvious. Will it be turned back on, or will Putin execute a squeeze on the European energy sector, a move that threatens to completely collapse the European economy? That's not an exaggeration either. One of Germany's top union leaders was quoted saying that because of the gas bottlenecks, entire industries are in danger of permanently collapsing. That includes aluminum, glass, and chemicals. It's hard to do business and compete with the rest of the world when you're paying up to 10 times more than everyone else for basic input costs. Even without the closure of the pipeline, Germans are already facing the consequences because of the reduction in flows. The German front-year power price level has jumped to 343 euros, a price that has never before been seen in history and 6 times more than what Germans were paying historically. Javier Baez, an energy columnist at Bloomberg, took to Twitter to say that at these levels, German manufacturing would simply crumble. For more evidence of this developing situation, look no further than the TTF, an index that measures natural gas prices in Europe. The chart is absolutely breathtaking, with nat gas going essentially parabolic, trading more like a meme stock and less like a commodity, approaching numbers that were previously thought to be impossible to hit. As of the making of this video, the index is at 174 and rapidly climbing. Pre-pandemic, the level was at 13, which means that Europeans are now paying 13 times more for natural gas than what they were getting pre-pandemic and pre-invasion. To put it into perspective, think about this. The average natural gas bill in America per month is $56. Now imagine suddenly paying $700 just to keep warm. This doesn't even factor into reality that so much of the world's industrial output is reliant on natural gas. For example, gas is the essential ingredient required to produce fertilizer, and with costs skyrocketing, this market behavior eventually flows down to consumers and causes massive spikes in food costs. Some companies are already taking measures to save. In July, Bavonia, Germany's largest housing group, began to throttle its tenants' heating at night to save gas. It's really not surprising that as the situation continues to worsen, we are seeing more and more violent protests break out. In Italy, taxi drivers started a massive strike, which ended with an attempt to break into parliament. In the Netherlands, police officers fired shots at Dutch farmers who were enacting a nationwide blockade, blocking off roads, surrounding distribution centers, and causing mayhem throughout the supply chain. Supermarket shelves saw rapid depletion as the situation continued to worsen. The next day, Italian farmers were next, following in the footsteps of the Dutch.